Let's kick off our global policy update for today by looking at the latest development in India, where, according to statistics released on Friday, the trade deficit has increased to $18.7 billion, as at the figure released in February. What is the implication of this, and what are the factors responsible for this surge in February? Let's see what our in-house analysts will have to say about this and its perspective. We're being joined by Dr. Idahosa Osamhaze, as usual. Glad to have you join us this morning.
My pleasure to be on analyst this morning. Good morning, Blessing.
Good morning, sir. Welcome to the show.
Great. So how was your weekend?
Well,
busy as usual.
Yeah, we don't really have weekend. We work more weekend than weekdays do.
That's interesting.
But
Good
in spite of it, you look good.
Thank you.
All right, let's look at India. We're starting our global policy update from India, not Nigeria this time around. Of course, we'll still get to Nigeria, but let's start from India. And then the latest development, according to statistics released on Friday, says the trade deficit has increased to $18.7 billion US. You know, when you have trade deficit, the implication is your import has increased more than your exports. Give us a background to this, and what do you see playing out in India with these latest statistics?
Well, if you look at the data that was published, and then, of course, the prediction by Recha, that, of course, the figures should have been around 18.30. Now you're having 18.71 in terms of trade balance between Israel and other countries in the world. So that suggests that in February, India had to import about 60 billion worth of commodities to its market and exported about 41 billion in exchange. And that's accounted for that gap in terms of the deficit that is recorded. Generally, and that is global too, we must also look at it that India is also relying and depending more on external supply and is buying more than is selling. And that, of course, is a challenge, and that's what nations try to remedy, to see how to kind of reduce the gap between what you are selling and what you are buying. So that you are not overspending. What that means is that you are seeing more foreign exchange leave India to the outside. And then, of course, less is coming in. And that put pressure on the local currency in terms of people having to have access to the international currency for exchange, which is the dollar. So the local currency will be under pressure because you will need more dollar to be able to buy from outside, and what you are getting or selling from the outside is not enough. And that, again, affects pricing, which puts further pressure on the inflation trend within the country.
All right, so India is also exporting, even though, like you just said, they still depend on import. But would you consider it a bad situation when India exports 41.40 billion and then imports 60.11 billion worth of goods?
Well, I don't see it as bad. From projection, it's not something that is very bad. But again, you also understand that some of all these issues also have their own political undertone. India is going into election in April, and opposition can actually take this figure as a point to argue against the effectiveness of the economic policy of Prime Minister Modi, because one of the things that people have actually advanced about Prime Minister Modi that has been very strong in terms of economic policy in India, that India is becoming very strong, and then you are looking at it from that point of view that he has weakened opposition, and what he has succeeded in doing is building a viral economy. Now, but you're saying that, of course, the deficit is widening, and somebody is saying, oh, maybe it was a fluke now that the chickens are coming to roost. It will mean more that maybe the policies are not as effective as people would say. So there's no way that, of course, opposition will take advantage of this kind of data as we move toward area election in April.
Ideally, when a nation experiences trade deficit, what will be the economic implication of that? That's what you refer to as a negative balance of trade.
Of trade, yeah.
Yeah. So globally, what will be the implication of that economically for that nation? And then what are the things that can be done to correct this kind of trends, especially when it becomes persistent?
Yeah, but again, it's also to look at what these items are that are really being imported. And number one is to look at their possibility of these things being made in India. So you're looking at having to put energy in industrializing your environment or your economy, and the things that can be produced locally, you don't need to export them. So it's that analysis that one also will have to look at in terms of trade deficit. It's also to also look at it from the point of view to look at it. Is it also very strategic that you're building a new industry and then of course you don't have capacity, so which means you will need to have to import so much in building that industry. In that case, it becomes very strategic, and it's not something that is going to be a long-term issue. So all these analysis needs to be brought to bear to actually be able to suggest what policy option that one can recommend for India. But unfortunately, the data and the spread are not available for one to actually see, to look at it from that perspective and say, okay, are there goals that India could actually do at home? Why import this? Are there more India can produce? Is there a gap in terms of the exports opportunities for India? Is there a need to expand the production base so that you will be able to feed the market? It's possible for you to actually be exporting, and the other nations are expecting more from you, but what you can deliver at the moment is not enough to meet the demand out there. Then you also be looking out for opportunity to scale up, which of course can also help the local industry in India.
Let's do some comparison. For the United Arab Emirates, that lives basically on imports, and for a country like India that exports and also imports, what is the difference really? How is the UAE able to sustain on imports and still have its economy grow, while other countries are having both exports and imports? Still is a struggle.
Well, it won't be a nice comparison to use the UAE, because you see, logistically positioned in UAE is that UAE is about 3 hours away from 3/4 of the population of the whole world. What that means is that the market in the UAE is proximate to the biggest population around. From UAE to India is about 3 hours. To China is about 4 hours. So to Africa, you see, the proximity to huge population in the UAE is an advantage. And so what UAE has done as a hub, though they are not producing, they are also exporting nation. Because you see, the goods come to UAE cheap, and neighboring countries come to UAE to buy, because they have entered into agreement. Though they are not having industry producing this good locally.
So they're like the middlemen.
Yeah, but they're like, yes, a middleman. So you ship it in and they ship it out. So that's why their port is always busy, because it's not just about import to UAE. You'll see that a whole lot of Nigerians are bringing things from the UAE to Nigeria. So that is recorded against export. So for them, and so they are not actually, it's not just as if they receive everything and they consume it alone. It's actually like a wheel. And then, of course, as it comes, they redistribute to other places without really spending whole energy in terms of local or domestic production.
All right, you raised something quite important earlier, talking about what led to the surge in February, and as a result of the fact that India did more of gold import in February than any other month. According to the statistics, India imports gold primarily from Switzerland, that's about $13 billion, from South Africa, $3.3, UAE, the one you talked about, which is about $3.2, from Guinea and Bolivia. So you could see the relationship between India and UAE is quite strategic. But what do you make of the statistics, just in February alone, the surge in gold import? Earlier you talked about the need for this thing to be produced locally. What does that suggest to us about, this disposition of India to the production of gold, which primarily was the main commodity that was imported in February and led to the surge, according to the statistics?
Again, you look at it from the geopolitics that's also playing out. And you know, recently we were also talking about India being a fundamental member of BRIC nations. And what the BRICS are trying to do is to have currencies that is gold-backed. So it's not strange that there's so much importation of gold into the UAE as a new means of storing value. What that means is that they are de-emphasizing dollar. So it's a strategic trade, and if you don't have gold in your place, what do? You have to import it. So you see, the emphasis is to actually get in gold into your environment and see you are using it to preserve value. And it become a new store of value rather than put the money in terms of dollar, which of course is the international currency for trade. Because like we said last week, you see the BRIC nations are also looking out for opportunity to de-dollarize the economies and look out for their currency that are also gold backed, that you can actually retain value in gold rather than in dollars. In that case, if you don't really have a need for dollar, you don't need to go put your money in dollars, and which of course what many nations had done because they are hedging currency against very strong dollar. So for me, this is to some extent strategic, and as you're looking at it from that point of view, that they are buying gold and they are shoring up another means, alternative means to storing of value. So if you put those golds in your house for years to come, the value keep going up and then it doesn't diminish. So you don't need to actually keep your local currency because of course Indian currency is also very weak, and because they are looking access to the market. And so if you have to store, people are thinking and say, oh, currency is going to be weakened, MPC is going to reduce rate or increase rate, and people are thinking, what do I need to do with my currency? So I better buy up dollars and store up this value in dollar, and therefore put more pressure on the local market, raising inflations and foreign exchange insecurity. So this is strategic for them from the point of view of the geopolitics of the BRIC nations.
All right, let's look at services export. Now, in terms of services, India did export $32.35 billion in February, while imports were at $15.39 billion. So in terms of services, they had more to export. Is there a way India can shore up what it's not having in terms of merchandise export with services? They're doing quite well there, but is there a way to expand it?
Yeah, but I think that market is already almost overstretched for India, because you look at it, almost all the nations in the world are relying on India for the export of knowledge, because you're in a knowledge-based economy and you require a lot of people who are sophisticated in terms of IT, and of course the fourth industrial revolution with the Internet of Things and AI and robotics and humanoids everywhere in the world. And of course they are pioneering the power base of the software that drive this process. And then also forget too that of course most of the what you may call customer service, for example, offering actually is happening from India. You will be shocked that you are calling MTN today and they are telling you, oh, service is not available. The person who's actually speaking is not in Nigeria, it's actually in India. And you've seen, of course, in India, people who are operating tax policies sitting down in India, and they are operating tax policies in the US, because almost all of all these things are done online. Now, all of all this earn India a whole lot of foreign exchange. And don't also forget that every Indian who works outside of India actually pays tax back home, as long as he's carrying the passport of India. So these are where you see these services, service offering as exports, bringing a lot of foreign exchange to India. But I think India, to a very large extent, had invested so much in knowledge-based economy, and they continue to do it because a very little child in India, 10-year, 9-year-old people are already producing great games and things that they can ship elsewhere. So continuous investment will be good, but I think that market is doing really excellently well at that number.
Let me point your attention to something interesting as well about the statistics. India's export rise 11.9% to $41.4 billion in February, highest in 11 months. Isn't it interesting that the same month that you're expecting or experiencing a surge in import, the other side, export, you're also having another surge, 11.9% increase to $41.4 billion, the highest in 11 months, same month.
Yeah. Yeah, I think looking at it from that perspective again, you see they are doing more, they are selling more, they are also accessing international market, but that does not take away the gap. Yes, they are trying and pushing what they can sell outside, but imports still supersede the exports, and that's really the issue. So what that means is that what you have earned and what you have given out, there's a deficit. And what nations struggle for is that trade balance. So you don't have so much of or so large deficit, because what you are selling should actually be able to buy what you are buying. Now, if what you sell is not able to pay for what you're selling, there's a shortfall. How do you manage that shortfall is what the real issue in terms of economic policy in India will be. How do we accommodate these excesses that is coming? Yes, they're trying, and I think they need to do more in terms of shoring up that value and reducing importation so that there can be a balance of trade between India and the rest of the world.
All right, before we wrap up quickly, what's the interest in India's trade? Because this was actually forecasted even before the government released the data on February's trade balance.